Just before we get started, everyone, in today's podcast, Faris is actually going to use a website, a trading charting platform called TradingView. And it's actually free to sign up. So if you want to follow along, have a look at our YouTube videos and go to tradingview.com. You can actually use the free account. It's fine. You get, I think, a couple of charts. But if you're serious about trading and you sort of want more charts and more indicators and get rid of all those restrictions, we would love it if you threw a few dollars our way, if you went to coincompass.com/tradingview, and that doesn't cost you anything, just throws a few bucks our way if you happen to sign up TradingView.
This is Bitcoin Basics Podcast with your host Faris, that's me, and Gordon from Coin Compass. We're Bitcoin advisors and educators supporting business and individual investors to safely buy, manage, and control their private keys, Bitcoins. This podcast is strictly educational and is not intended to be financial or investment advice. Full disclaimer in the show notes and at the end of this episode.
Good morning, afternoon, or good evening, whichever time it may be for you, and welcome to another Coin Compass Bitcoin Basics podcast and YouTube show. So, Gordon, can you timestamp this for us on the blockchain, please?
Absolutely. So we're looking at 619,161, or for those people who don't understand block time, Thursday, the 27th of February, 2020. And today is going to be a very heavily visual feast as Faris goes through plenty of charts and stuff like that. So if you're listening to our podcast, which is audio only, you might want to head across to our YouTube channel and have a look at this one online. So you can find that on the link on our website, coincompass.com. And I'll probably annoy everyone by asking some newbie non-trading questions, but I'll head it over to Faris. So Bitcoin's currently going down at the moment, so this is actually great timing. So when will Bitcoin reach $1?
Thank you, Gordon. So yeah, today we are going to be looking at charts. Now, we just want to reiterate that at Coin Compass, the purpose of what we do is to teach people how to buy and hold Bitcoin as a long-term investment. However, due to popular demand, we are going to be looking at charts because it is a very interesting time at the moment. And we think that this year will be a really interesting time in Bitcoin, especially as we near the halving and with everything else going on in conventional markets. So I want to have a look, first of all, at the daily charts. And this is when I first started getting into trading in Bitcoin, was in late 2016. So I remember when I first got into Bitcoin, put my first trade in, it was at around $600, which was just in this period here, further back actually. Yeah, just around here is when I started getting into Bitcoin. It was around that $600 mark. Now, at the time, I was treating Bitcoin as any day it could plummet to zero. So I was looking at any trade that I was putting in, risking $600 or more if I was trading on margin. I was so nervous about it at the time. And I was just reading about all these things coming up about the fork that was coming into Bitcoin Cash. So yeah, I was treating Bitcoin at the time as an asset that could go to zero in the space of 10 minutes. So very, very nervous trader. And because I was even looking at like 4-hour charts, and you look at this volatility in 4-hour charts, and when you're looking on that time frame, I mean, look how stressful that is. You think, wow, look at that. You jumped from $1,000 in a few minutes. So looking on 4-hour charts, there's so much volatility. And you think, oh, I can make so much money. But the truth is you're going to lose more than you make because these moves were so fast that by the time you're in, the move is over and you're going to get some people on those shorter-term timeframes already taking their profits. So yeah, if you look at these 4-hour charts, just so much volatility. I mean, we're looking here from 5,000 to 11,000 in the space of a month. So the more your time horizon widens out. So by that, I mean you're looking at a longer term time frame. You can see that, for example, in here, it really just takes out those huge ranges. And this is on a daily chart. So if you even move to a weekly chart, which is what I want to focus on today, things do stabilize a lot better. You see these wicks and tails. So wick is way up here at the top, but tail is here at the bottom, these spikes. They really just iron themselves out. So on a weekly chart is where I like to look at Bitcoin. And as you can see, I'm looking at a naked chart here, which basically means I've just got one moving average. And that's more as a reference point than anything else. So a breakdown, that moving average turned down. Now that's a lagging indicator. It tells me, look, we are in a bear market. It's going down. Then we saw this breakout above the moving average, and the moving average turned up. We've got a breakdown below, and it's since broken up again. But what we like about Bitcoin here is in these weekly charts is we basically get to see very clean patterns. Now, I remember, and the stuff I'm referring to here, guys, is basically just technical charting. And we'll put some links to the Richard Schaubacher book on technical trading. And I think that's in the 50s that he wrote that. But very, very simple formula. So if you look at this here, we had this really nice right angle triangle that was forming. And this, I remember this because me and Gordon were in Thailand at the time working on Coin Compass. And this was just such a beautiful pattern. So break below this line here, you're going lower. Break above, you're going higher. And I remember not even trading this because I thought, you know what? That is such a beautiful, obvious pattern. It's too obvious it's not going to happen.
So I'm just going to interrupt you for a second, Faris. It's interesting because when we were listening to YouTubers and other traders, they actually had the exact opposite opinion. Like the, what was that, about 6,000 at the bottom of that wedge?
I think you're right. Yes. Yep. Correct.
Around about there anyway. Yeah. So everyone was saying, it's bouncing off this, this descending triangle wedge, whatever you want to call it. And that means that the price is going to go up because it's showing such support at that line, which is obviously the exact opposite of what a support line would do. The more times you bang your head against a brick wall, eventually the brick wall caves in.
Exactly. That's exactly it. So with markets, you got to remember now, I'm quoting someone else here, Patrick Serezna, who is one of the co-hosts of Macro Voices and runs Big Picture Trading. Markets are made up of people. Now, Bitcoin is a completely different asset class, unlike anything we've ever seen. But there are people buying and selling it. People buying and selling it will buy and sell based on two emotions, the fear of missing out and the fear of losing money. The fear of losing money is a stronger emotion than the fear of missing out. So what do I mean by that? And exactly as Gordon said, we saw this line, 6,000 get hit once, acted as support. So if you bought here at 6,000, you saw it go up to 8,500, you're thinking, yay, I'm happy. You saw it come back down to 6,000, you're thinking, okay, that was a pretty quick run. We're back to where I bought. I'm nervous. If it happens again, you're going to sell and break even and get out. So you got to remember, these are psychological points. These are points where this here, see this wick? A lot of buying on that day. They bought at 6,000, saw it go up, come back down again, go up, didn't go as high. These guys that bought here are thinking, I missed my opportunity to get out here. I missed my opportunity to get out here. I'm not going to miss my opportunity again. Comes down to 6,000, I'm out. I'm breaking even. These guys that bought here, same thing. Came back down. Okay, if I'm nervous now, comes back down to 6, they sell. The more time, it's just like in war, it's just like in boxing, the more time the single point is hit, the weaker it gets. This point got so weak when it finally broke, bang. It was a huge move down. And then what we saw here, see how it's just going sideways. And I'm going to put volume on here. So what we have here is when this thing is not going anywhere and volume's not going anywhere, that's called churning. No one knows what's going to happen. So when a stock, a commodity, or something is churning, which means it's just moving on very, very low volume, it means the buyers and the sellers are undecided. Are we going lower? Are we going higher? We have a breakout on high volume. Now, what was concerning here was there was no follow through on volume. So it took a lot of buyers, a lot of buying power to come in and break us out of this churning point here. And if I put in Bollinger Bands here, you can see here, these Bollinger Bands got really close. And that just means that it was getting so tight, it had to break up or down at one point. So it broke up and then it followed higher.
So Faraz, I'm going to have to break in again for a newbie question. And I'm going to assume most of our audience today are not traders. If you're a trader, this is probably really boring. What's a Bollinger Band? What does it represent?
So Bollinger Band is basically looking at volatility. So what we're looking here is I actually do a double Bollinger Band. So what we're looking at here is see this shaded area here. I've got this line here and then this line down here. So what this is showing is a Bollinger Band is showing the move or the volatility of this move where times 1. Up here it's times 2. So here it is moving at 1x volatility, up here at 2x the volatility of the price. So essentially what we're seeing here is when it gets way up here, we see, whoa, that is really extended. So most traders, what they do is they go, when it gets up to here, that is way too high and should come down. I trade it differently. So for me, I do Bollinger Bands I find work really well in currencies at the moment. When it breaks below here, I'm looking to short. And in here, I would have gotten long on this one there. I would have shorted here, made a loss. Would have shorted here for profit. So you're basically looking at the volatility and how far it's extended in this range. So that there's a huge move. And this is why I don't use Bollinger Bands very often with Bitcoin, because Bitcoin can just go exponential for a very long time. So Bitcoin, what I found is because it's not influenced by central banks, it's not influenced by really big markets, it really is technical trading works far better than anything else. Just when I say technical trading, I mean naked charting, as in the stuff like Schaubacher removes. Schaubacher uses, sorry. Anyone who's a trader, please follow Peter Brandt, Factor Trading. He's easily the best I've come across, and I've been trading for about 5 years, but haven't been actively trading for some time. So I never got into this move here. Me and Gordon, I remember we talked about this because there was no real pattern. We broke out, but again, volume to me, I didn't get the volume on this one to say, okay, this is looking pretty healthy. And even Tone Vase, who probably would know more about trading than Bitcoin than anyone else, he said, I don't trust this run. And so what happened here? Big volume, which means it took a lot of buying pressure to get it up there, but then volume churned. Volume went up again. So if you were a gutsy trader, you go, okay, volume picked up, but it kind of just went sideways. Up here, that was a very worrying candle. So for me, volume is never an indicator when to get into a trade. It's an indicator as to when to get out. So here I saw this is called that's a huge wick, which means you had a lot of sellers waiting at $14,000. So at $14,000, you had a lot of people waiting to sell because volume went up, but the price came down. So that to me was a sign that, okay, that's a problem. And sure enough, that proved to be a short-term top. We saw a lot of volume in here again on a down day. And we wrote about this in one of our Coin Compass newsletters. We're getting concerned because the volume spikes were on down days. This again, we wrote about this. This is an indecision candle. High wick, and high shadow, which means a lot of buyers came in at 7,300, but a lot of sellers came in at 10,400. Same thing. We saw it sell at that same price. Markets have memory. If you bought here and you watched it go down, what are you going to do when it gets back to that exact point? You're going to sell. That's exactly what happened. The guys that bought here panicked, sold here to get their money back to break even. So where's the next line of support? The next line of support is down here. Where are we at? Down there at 6,500. So we should get a bounce at 6,500. If it breaks through 6,500, then we are looking at revisiting this level here, which is 3,300. Because there's a big vacuum in here because there's no support level. This here, in there, I would consider very medium-term support level. You get a small bounce in 5,000. So if we break through 6,500, I think we'll get a small bounce at 5,000. We break through 5,000, your next line of support is 3,500. Hello?
Yeah, sorry.
Cool.
Sorry, I was muting. I was muted,
Cool.
not muting. That sounds like something else.
I am just looking at these key patterns. So and this is a weekly chart, which is nice and simple. So if you look here, we've actually got a nice triangle again here. So with these triangles that I'm drawing, they need to hit 5 times. So we had 1 point, 2, 3, 4, 5, 6. When it broke through that base, bang, we went lower. So again, that didn't last very well. It kind of broke that pattern, but then again, we had a big indecision candle. So when these indecision candles, to me, when you're undecisive, and there's 2 emotions that run the market, it's the fear of missing out and the fear of losing money. Fear of losing money is stronger. So when you have indecision, to me, that says we're more likely to go lower than go higher, because indecision means the people that are nervous are going to sell. Nervousness, fear, to me, is a more dominant emotion than hope.
Now, without making this a Trading 101 podcast, well, mind you, I think this is extremely useful. A lot of our listeners might just want to looking for good sort of entry points on a macro view to get into Bitcoin. Hashtag not financial advice. What sort of things are you looking for? Or what sort of things should they be looking out for?
So the way I look at it is I just look at these key points here. So you see right here where the price bounced off this line. And this is not coincidental. Human beings are highly emotional. We work on short-term memories, and we also work on round numbers. So I'll actually show you an example of round numbers later. So with this, I personally believe that we are heading to 6,500. I think we're going to get a bounce. How strong that bounce is will yet to be seen. If we bounce at 6,500, we do not go to new highs, short-term highs above 10,500, then we should probably break below 6,500 and we will retest 3,400. So that's where I see us going, is bouncing off of 6,500. If we break out to new highs, then we are going higher. If we don't break out to new highs, as in above this level here, 10,500, I don't believe this level will hold for 4th time. I think it will break. And we are heading back down to here, 3,500. 3,500, personally, I would see as an excellent buying opportunity, because if you are a Bitcoin store of value person like I am, like I believe in a long-term time horizon for Bitcoin, not a short-term, then we are looking at these next key levels here. This is a huge one. So 1,800, so 1,900 here is a huge support level there, because people who bought there saw it go way up to 20,000. So if we break 3,300 and we go down to 2,000, that's your next huge buying opportunity, 2,000. So I'd be surprised if it did that. Personally, I do see us going down to this level here, this vacuum here between 3.5 and 5. I do expect us to revisit this level, 3.5 to 5.
Well, I'm not going to speculate because I've done it plenty of times in the past, and that's where I've gone wrong. So I just follow the trend nowadays. A lot of traders, though, look at the 200-day moving average or EMA. Do you put any significance in that?
I used to. So when I first started trading, I looked at 3 moving averages. Now, all a moving average does is confirm a trend. So I'll show you an example of some of the templates that I use. So I've got these moving averages here. Let me just get rid of all my indicators. So this is how I used to trade equities. So now, for example, here, to me, this confirmed a bull market. So the red is a 20-day moving average. The yellow is a 50. The green is the longer 200. Now, if you look at the 200-day moving average, it's never once gone down, I think, in the history of Bitcoin. Well, actually, that might not be true. I think because Bitstamp doesn't go as far back as Mount Gox. But I mean, look, it did hold there. So if you bought at the 200-day moving average right here, I mean, look at that. That was at 3,100. So if we go back down to test the 200-day moving average, that's at 5,500. So look, that is potentially a good entry point, bouncing off this 200-day moving average. So to me, it is a bit of a lagging indicator. But yeah, a back test, and let's be honest, you never find a back test you don't like. So yeah, I mean, look at that. It's the 200-day moving average has been below the price of Bitcoin since, it's been, 200-day moving average has been below the price of Bitcoin since October 2015. So if you buy at the 200-day moving average, then just in these last 4.5 years, that's proven to be a very good line of support. And this was December of 18. And look at that. Bang, right on it. Right on the 200-day moving average. Like we're talking to the dollar. People were buying on a 200-day moving average to the dollar, and huge volume right there. So yeah, you've obviously got people lining up to buy on that 200-day moving average. So right now we've got a cross here. So right here, you've got the 2 moving averages, basically. So the red moving average was your short term has crossed below the yellow. So that's indicating a short-term downtrend. But as you can see, these are lagging indicators. So I used to look at them, but now personally, I just prefer my naked charts. So this is the one I use, and that's just really as a reference point, just on the page. And that's just a 21 weekly moving average. So I look at the weekly charts now because it just takes out all this volatility. And again here, like I really should have bought that. And this is where a system, if you have a system in place, you ignore the emotion. And that's what you want to do. You want to ignore emotions. So here, I mean, you look at that broke, that closed above the 200-day moving average. I should have bought that. And I didn't, and it went all the way up to there. And I would have actually set a stop around here, I think. So I would have been in at 4,300, and I would have had a stop at 7,300. So it would have been stopped out.
Yeah, that's a good point. Emotional control is just so crucial. Sometimes we look at like 4-hour charts, or even when we're about to buy 1-hour charts, which is just ridiculous. It's just absurd. I think you could do a lot worse than just looking at a weekly chart, and that's all you look at.
Yeah, and this is the thing, like what surprised me, and I'm going to move to a daily chart here, is, and I remember 2017, when we hit 10,000 on Bitcoin, was it just sliced through the $10,000 mark. I was expecting very strong resistance at 10,000, but it just went straight through it the first time. And where are we here? So yeah, we had a nice dip here. I remember that. I think that was actually when the halving happened. Not the halving, the fork to Bitcoin Cash. I think it was in there. And it coincided with the cancellation of SegWit 2X. We went straight up, and we're approaching 10,000 here. Where's 10,000? Right there. And I was expecting it to pull back to at least back down to around 8,000. but it just skyrocketed through. And I remember I actually had an order in to buy at $10,200. And I remember this on a Friday night, I rang my broker and I canceled the order because I thought, I thought it's going to come down. So I canceled the order at 10,200 just to watch it go up to 20 grand. And that's because, to me, I thought 10,000, such a huge round number, it's got to play an impact. But here's the thing with Bitcoin. At the time, all the exchanges, you had quite a difference in price amongst the exchanges. It wasn't uniform like it is now. There were some really big differences, like 3, 4, 5% differences in exchanges. So the round numbers were a lot harder to gauge in Bitcoin, but I was still surprised by this. Tone Vays picked it up. He actually was in an interview, and the interview aired after he made the prediction, where he said he thinks 10,000 is going to go through just like butter. I can't remember what his hypothesis was, but he's dead right. He said it's just going to go through and keep going.
That's actually a really good reminder, especially for people not like me, but people who are sort of traditional traders. You sort of get a little bit of analysis paralysis. You look at sort of indicators and you look at, say, for example, the RSI going through 10,000. I think from memory was about 90%, or it was at least like really high. So you're sort of thinking, it's going to have a correction, it's going to have a pullback, and it just keeps on going. So sometimes irrationally, Bitcoin can, even if completely overbought, just keep on going. So there's a lot of FOMO involved.
And I mean, personally, this is why I just like naked charts, because if you only had one thing to look at to make up your mind, what would it be? It would be the price. And the story is in the price. This is something I'm copying from another trader where, the story's in the price. Do I really need to know what's going on? No, I'll just look at the price. Now, I've been trying to short the stock market, the S&P 500 and the NASDAQ for 4 years. And I lost a lot of money. I would have made money if I ignored all the smart people who've been trying to short as well, and who have gone bankrupt trying to do it. And if I just paid attention to the price, I would have made money by going long. But I thought, the S&P 500 is way too expensive. It's got issues. It's got to come down in price. But I was wrong. Had I followed my rules and just said, just go long, I would have made money. But I thought, it needs to come down. It needs a 2008 moment.
Fair enough. Now, one elephant in the room, and just to timestamp this is Thursday, the 27th of February, 2020. We are 75 days, 5 hours, 39 minutes, and 43 seconds away from the Bitcoin halving. What kind of impact is that going to have on the price now and in the future, do you think?
Yeah, so we've spoken about this. To be honest, I'm not sure. There's just not enough historical precedents for me to come up with a hypothesis as to what it'll do, because it hasn't happened enough times. And the 2017 run from $1,000 to $20,000 put so much froth into the market, and there are so many people that are still burnt by 20 grand. So, I'm going to zoom out to a daily chart now. So this run from here to here, that was exponential. It's going to take a while before we go back, because markets have memories. And for me, when I zoom out on a chart, I zoom out to 5 years, because I think anything that happened within the last 5 years is relevant. That price is still relevant. People who bought at 20 grand are going to sell the next time it gets to 20 grand. And these are, if you can see what I'm doing, I'm going the peaks here. These are peaks. So this is the resistance that Bitcoin has ahead of itself. This here is all resistance. So Bitcoin's got to break through all these points of resistance before we get beyond 20 grand. So that's resistance. Markets have memory. People bought at 20 grand, go, okay, next time it goes to 20 grand, I'm out. People who bought here, 17. Next time it goes to 17, I'm out. So a lot of these people probably would have sold around there. But this is the thing. This is all based on supposition. We don't know who's still in the market, how many are still in. It could just shoot straight through. It could be all the people who bought here are exhausted and just got out here. But that's 2018 was not that long ago. You're talking less than 2 years. So markets have memories. Markets are based on people. So if we look at the support levels there, support level here, and I'll change the color on that actually. So the green is support, which means if the price gets back there, I expect a bounce. This one here, I don't see much of a bounce. I think it'll be short term because it's hit it twice now, 3 times actually, on a daily chart. 1, 2, 3. So if you bought here, and this was a lot of buying here, you can see that wick. See that wick there? It means a lot of people bought on that day. Woohoo! I'm a genius. I went from 6.5 to more than doubling my money at 14,000. Oh, hang on. It's come all the way back down to 6.5. I should have taken my profit around here. Whoops, I've missed my opportunity to profit here. As soon as it gets back down there, I'm selling, and you might have more sellers than buyers. So if we break here, I think we're going back down to here, 3.5. I personally would be looked to buying, and this is just me personally, guys. You don't have to do what I say, at 3,500 above my support line. Why above my support line? Because if everyone's paying attention to this, you're going to get a lot of people buying there. So I would be looking to buy just above that spike getting, because I might miss out. And this has happened before. Is you go, okay, I want to buy exactly on that line at 3,300. Well, I want to make sure I actually get in. So I'm going to buy at 3,500. So I make sure I get my order in, and maybe someone else will go at 3,300, maybe not, but at 3,500, I'm above that line of support, and I know I'm going to get in. And I would have my stop loss down here. So I'm going to buy here. So buy in the red. Sorry, I'll change that color. Buy under red, even though it might go to the green. The green is a stop loss, but probably too close, so I'd have it, the purple is my stop loss. That's for a trader. So that's what I'd be looking at doing. Buying at 3,500, stop loss at around 2,800. And you can see my stop loss here is below this level here. So I've got a lot of support at that level. So I know if it breaks my stop, we are going significantly lower. We'd be going all the way back down to 1,800.
Okay, so everyone listening, don't worry. You don't need to worry about what Faris just said because it's not going down that far. But Faris, again, I don't want to simplify what you've said, but a lot of people listening are probably beginners and they're like just buying Bitcoin on an exchange or something like that. They have no idea what you're talking about. Can you just go through stop losses and what's that all about?
So a stop loss basically means at what point am I selling? So, and this is where you want to have a stop loss, because if we're looking, I'll go back to a weekly chart. And so let's just say, for example, you were very lucky and you happened to buy on this big candle here. Well, at what point are you saying I am going to take you want to have 2 exit strategies. One is when the market moves against you and you're out. 2 is when you decide to take your profits. So again, please remember, I'm talking about trading, not investing. As Bitcoiners, as we say, long-term investment, just hold on to your Bitcoins. But if you're trading, you need 2 things. What price do I get out? So stop loss is basically where you say, this is where I'm selling. So if you bought here, your stop loss would be around there, because that's the red line, because this green line here, that's your support line. You don't want to be on your support line because the support line gets tested. It will come back down there. So you want to be below your support line. So if it goes that low, it means the trend has moved against you. So this here is how you factor in your risk. So you go, if I'm buying Bitcoin at 4,200 and I'm going to be selling it at 2,200, Well, then $2,000 per trade is what I'm risking. If that's too much for you, only want to risk 400, then you buy 0.25 of a trade. So this is actually how you trade. This area in here, what price are you in and where's your stop loss? So if you're in at the green and your stop loss is down here, that is what you're trading. You're trading your risk because you don't know what's happening up here. You have no idea what's going to happen there. It could go up, it could go down, it could go sideways. What do you know? You know the price you got in at, you know the price that you're selling at. As the price moves up, then you move your stop loss up. So you saw his price go up. What you would do is move your stop loss to here because this here is a new point of demand, meaning the price went down, people bought in there. And you would put your stop loss below this point of demand. So if you bought in here, you're actually in profit now. So that is exit strategy number one, is called a trailing stop. Exit strategy number two is where you go, I'm going to sell half my position, for example, at a profit. So I'll move this back down here. So we're in our trade, stop loss is there. We got in at the green line, which is 4,000, let's round down, 4,500. Your stop loss is 2,500, so you're risking $2,000. So if it goes up by $4,000, you want it, that's double your return. You want to then take some profit. So $4,000 up, 8,800. There, you're selling half your position at the gold line because you go, you know what? I need to take some profit. So, and here you would have sold half your position there and you'd let your other half run.
All right, thanks for that explanation, Faris, because I think when people buy Bitcoin on exchanges, they're not really trading platforms. They're just kind of buying Bitcoin and moving into cold storage, which is certainly what we recommend. Buy and hold. Dollar cost average. Don't transfer 50% of your life savings into Bitcoin, a couple of percent, and don't buy it all at once. But if you do want to trade, this is absolutely fantastic advice. But let's get back to the more macro sort of viewpoint. You obviously believe Bitcoin's heading back down in the short term. Is that a major correction, or are we just seeing a reversal in a trend and we're going to be in a bear market for the next couple of years?
Yeah, so on a macro level, we wrote about this in last month or February's newsletter, was the correlation between Bitcoin and gold. Now, we personally both believe that the correlations between Bitcoin and gold are on an economic level because they're both store value stories. And 2019 was really the first time that we saw the price of gold and the price of Bitcoin really have a strong correlation. So we saw this in 2019. Before, they didn't really correlate. The prices were not moving in sync. 2019, look at this here. So Bitcoin's blue, gold is yellow. And we saw that correlation. I mean, that really, really tight correlation in price. Recently, though, that's broken down. And when I say recently, I mean today. So Bitcoin's going down, gold's going up. So that's really interesting to me in that we had such a good correlation and now it's broken. They say with markets, as soon as something becomes obvious, it's too late. Don't trade it. If it looks really obvious, you're too late. So I'd be interested to see what happens now with this correlation, because gold is going up because of the fears of the coronavirus, which I thought Bitcoin would be as well. So today's move down has me very surprised because everything should be in the cards for Bitcoin to go higher. Coronavirus outbreak, stock market's breaking down, the halving's coming. There is a lot of good news, but it's going down. So that's concerning. When something goes down on good news, that's concerning.
Yeah, that's an interesting point about the correlation. I would have thought the same as well. But what about the stock market? That seems to be going down with Bitcoin as well.
Yeah, so again, the stock market's going down, and maybe people, like we see Bitcoin as a store of value story. Maybe people see Bitcoin as a risky investment like the stock market. So that could be what it is that even though we see Bitcoin as a store of value, Not everyone does. So it could be the majority of people trading Bitcoin probably view Bitcoin more as a stock market story and not a store of asset story, or is a risky asset and not a safe haven asset.
Fair enough. Well, I could ask a million more questions, and without turning this into a trading podcast, which is probably boring for the people listening to this, please subscribe to our YouTube channel. I think that's about it from my end. Is there anything else you want to follow up with and finish off with?
No, look, I don't think so. At this point, it's really interesting what's happening. I honestly would have expected Bitcoin to keep going up due to the coronavirus. We had a nice little pattern down here. This is called a reverse head and shoulders, where we broke out at this level here. And I thought it was, and it kept going. But yeah, hasn't this move in the last few days? Yeah, it does have me thinking that if we test this level again at 6,500, then I believe we are going lower. I think we'll get a short-term bounce at 5,000. But if we break 5,000, then I believe we're going back down to 3,500.
Just ignore what Faris said. It's not going that low. Don't worry. Hashtag
and again,
not financial advice.
Like I said, guys, I'm personally not looking at these as short selling opportunities, as trading opportunities. I'm looking at these as hodl opportunities.
Yeah, absolutely. So good sort of long-term entry points to buy Bitcoin on exchange, move it into hardware, your hardware wallet or cold storage, and check back on the price in 5 or 10 years' time.
Exactly. And yeah, just one thing I've just noticed is we are getting a nice little head and shoulders pattern here. So there, that's a top. See, that would be your head. And then we would have your left shoulder there. And we would form potentially a right shoulder here. I don't like drawing head and shoulders before they're completed, but I should know there we go there. So it's not textbook, but yeah, you've got a shoulder, head, shoulder. The neckline was here at 9,000, which we broke. So you could say that we've basically broken this head and shoulders formation at 9,000. So that there, 9,000, or around 9,200 will be support. So if it gets back up to there, I would expect some selling at around the 9,000 mark. And if we break, if we break 6,000 here, we are definitely going lower. I'd be surprised if we didn't.
Yeah, it's definitely looking bearish in the short term, but trying to predict the Bitcoin markets has slapped me in the face many a time, so I've given up on that.
Yeah.
One thing I found interesting, and I'm kind of like you, I simplify my charts nowadays, although I don't really day trade or kind of macro trade, if anything. We might actually need to edit this out. I have actually found, I don't know if you've looked at this indicator before, that the Bitcoin log growth curve is actually pretty accurate. Have you seen that before?
Yeah, I love the log curve. Actually, that's a really good point. The log curve is awesome on Bitcoin. So I've just turned it on now. And the reason I like the log curve is it just removes a lot of volatility swings. Well, no, it doesn't do that, sorry. But what it does is it does clean up the chart. And I know when Bitcoin was trading in around the 1,000 to 3,000 mark, Peter Brandt was huge on a logarithmic chart. He said that's the way you need to look at Bitcoin. So I think the logarithmic chart is really good, especially for your exit scenarios. It puts things into perspective. So here, if we look at the log chart, we can see here there's a strong demand at 10,500. So let me just change this line here. So that blue line, 10,500, huge demand. So when I say supply, that means people will be selling there. And back here as well, on this gold line, 6,500. So 6,500, if we break that, I'm afraid we are going much, much lower, potentially as low as, 3,200. Because you see here, there's not much supporting the price. It just kind of went up. There's a little bit here at 5. So on a log chart, we break 6,500. We're going to 5. If we break 5, we are going to 3,400. So these to me are key entry points. The 5,000 and the 3,500.
Don't worry, everyone. You can just ignore that advice. It's not going that low.
No, but I do like log charts. And look, another thing, if you're unsure, if you're looking at a chart the wrong way, so let's remove the log chart and let's go shorter term here. Let's just look at a 12-hour short chart. Let me remove these indicators. All right. Is this going higher or lower? I'm not sure. And this is the thing with, you actually do have a cognitive bias where you can believe in something and you believe it's going higher or lower. So what you can basically then do is invert your scale. Now, if I look at this, I'm like, look at that. All right, that is definitely, I think that's going up. Doesn't that look strong to you, Gordon?
It's definitely going down. It's going to reverse any minute.
So if you look at this, though, you think this is going to keep going up, don't you?
Yeah.
I mean, look at the, if you just look at this chart, forget the price, I've got support here, don't I? That's a nice level of support that's held. All right, I have broken through this peak here. I think that's going to go up, just looking at this chart. But yeah, it's inverted. This going up means the price is going down because we've inverted the scale. That's what that means. If that is your bottom, that's actually your top at 10,400. So what this does is when you look, invert the scale, it removes your cognitive bias.
That's an excellent point, actually. I'm going to use that in my trading because I'm totally emotional when it comes to that kind of stuff. I think you have to use log charts because when you're looking at a log chart, you're getting equal percentages. So whether the move was, in the 10,000s or when Bitcoin was in the 200s, you're getting equal vertical distances. So it's easy to see the proportions on a log chart, which you don't see on our linear chart.
All right, everyone. Thank you for listening, watching. And we know this is a departure from our normal content. We just did have quite a few people asking us about trading Bitcoin. Again, we do not advise it. We do not recommend it. We are long-term Bitcoin investors and educators. So our job is not to show you how to trade. Our job is to show you how to buy and hold your Bitcoin long-term. But we hope you did learn something from this. We may do something a bit more in depth in the future because when it comes to trading, know thyself. So you got to manage your emotions. You got to manage your risk. You can have the best system, but systems are ignored by human emotion. So that's really what trading is about, getting to know yourself. And we did a podcast about this recently. So, and just something I should have mentioned. The failure rate for first-time traders is 98%. 98% failure rate. So make sure you do want to get into this business and have a hard think about it. Is there anything else I need to mention, Gordon?
I'm surprised that it's low as 98% because it took me about 2 years to figure out that I'm not a good trader because I'm too emotional.
There is actually a test that you can go and do online. I'll have to find it. You can only do it once. It tests two things. It tests your personality, see if your personality trait matches, but it also tests your cognitive ability. So it shows you patterns and it sees how well you can forecast patterns. So that's something that's worthwhile doing. But other than that, I just recommend buy and hodl your Bitcoin.
Yeah, public speaking and day trading or trading Bitcoin are two ways to know yourself. Thanks. Thanks, Faris. Actually, yeah, we should do another trading video, maybe on more of the technicals. But yeah, that may be a good introduction to some people who want to trade with a minuscule amount of coins or money that they assume that is going to be lost because you probably will lose it if you're trading. So check out the description of all the links in the podcast and the YouTube video. And yeah, if you want to sign up to any of our free stuff, newsletters, a couple of ebooks, YouTube videos, guides, whatnot, head across to coincompass.com/free. Thanks, Faris.
Thank you, Gordon.
Until next time. Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.